Hello traders, this is my weekend video. Boy, the bears finally came out in force a little bit here to finish the month off of January. So 2020 is not starting out as a very good month for the main indices in the markets. I'm starting out with a weekly webs, and this is with my yearly value areas to give you a little better perspective of what we're doing here. Okay, this here was the value area high for back in 2019. Okay, we opened up and took off to the moon here in January on the SPY. And as of the very last day of January, we closed below the open for the year. Okay, so my point is we not only gave up all of January's value, we closed below that value today. So this entire value area that we have built out so far for 2020 is basically void. So you don't want to get locked in thinking, oh boy, this thing's just going to go sideways here. Look at this. See, back in 2018, 2018, we built out value right here. Oh, no, 2019, we built out value right here. Okay, this is the value that we actually should have been. 80% of 2019's value was down here, and then there at the end, towards the end of the year, on lighter volume, we rocketed higher, but the yearly volume did not migrate up with it. So just gives you an idea just how extended this market truly is. The annual volume did not migrate with price as we were putting in these massive gains here. Okay, so I started with SPY here. Now we'll look at our Qs. Similar situation. Price, the annual value did not build out with time and volume to higher throughout the course of the year. Instead, we had an end of the year take off. It's just like a rocket ship to the moon. Okay, now this one here, the Qs are still holding out a little bit better. We did manage to close above the 2020 open. So this is a little bit more bullish take that, you know, that January might hold out here and we might continue further higher in the markets. So just keep that in mind. This is a little bit more bullish take on the markets, despite the fact you see see here, I've got my fib fans drawn, and you notice this week, since we've crossed out of that fib fan, boom, we come crashing down here. So just something to keep in mind here, that we've migrated out of this primary uptrend into what typically is a volume void. If you draw another fib fan here, and this is how you generally do fib fans, if you break out of one of those, you take your other fib fan off the breakout line. So now this right here is a digestive zone. So it can come down. You know, this is typically where you find a little bit more bearish activity in a move like this. The markets are trying to decide whether bullish or bearish from here, and there's going to be a lot more volatility chop in this trading range. So keep that in mind over the next week or two. We're expecting a lot more volatility in these markets. Okay, with that being said, that's my quick rundown on the indices without getting in too much detail there. Where do I want to go from here? One second here. Okay, a quick rundown of some of the top option players movers today. And as you can see right here, on the call side, IBM, the ones that expired today, the options that expired today, look at this, 17,300% gain on some of these IBM options. The CEO decided to leave the company and are appointing a new CEO. So IBM really, those options just really took off to the moon here on that news. And there wasn't really anything wrong with the other one. It's just the idea that investors bought into the news. And then, of course, you had Amazon, which was up considerably higher earlier in the session, and it bled off throughout most of the day today. So it was near the highs of the session at the beginning of the day and just kept bleeding off with the markets. Okay, and then I also want to, I'll get back to the VIX, And then Tesla broke out to all-time new highs right into the close, and it gave it back there towards the end of the close. But my point is, it's still putting in new all-time highs on a very bearish tape. Okay, 1 second. Now the put side, boy, yeah, the puts really got some action today. Apple, really, they decided to start dumping Apple today for some reason. And basically, today was the decision to start taking profits on Apple. So, and I'll look at the chart here in a minute, but you can see that they just completely, Apple was really one of the top performers on the put side today. Roku also had some bad headline news came out, so they were dumping Roku pretty heavy. I was actually looking for Roku for the long side with the solid Amazon numbers and stuff, but no, there were some negative headlines that impacted Roku to the negative side. Intel Corporation, it was taken on the chin along with the rest of the markets. Citigroup, you never like seeing the banks as leading decliners in the markets. JP Morgan's on the list too. Facebook, of course, Facebook's got a lot further to go down, in my opinion. We're going to see several weeks of declines in Facebook, most likely. And Luckin Coffee, that's on the hold. It really ran up since the last earnings, and nobody wants to have exposure to Chinese stocks right here. So it's still got a lot of room still to give back since the last earnings run up. And then you had your NVIDIA semiconductors. And semis are seen to be out of favor at the whole Chinese mess too. So, as AMD really surprised to the downside, so semis are taking it on the chin after the AMD numbers hit. And then Visa reported, so that's impacting MasterCard, and they sold off Visa. The numbers weren't that great. I looked at them. I almost got into it earlier this morning on the put side on the Visa. And the markets were quite indecisive there towards the beginning of the session, so I did not take that one. And see here, is there anything else in NVIDIA? Yeah, those are the main ones, but you can see I'm off the screen, and we're still near 400% returns on these the put side today. So it was very bearish across the board. Quick rundown on my breadth indicators. Look at this, how bad NASDAQ was today. 96 to 7 declining versus advancing. This is never a market you ever want to go long in with your declining issues of that magnitude. That's just, the buyers were just absolutely shut down today in this market. So very, very risky to try to take your longs into the long side here. Similar situation. Look at this. It's basically about 5% of all the stocks in the S&P 500, less than 5%, were actually positive on the day. So it was very negative across the board. So you have your when you have that much breadth going negative, you just trying to go after any type of pop in these markets is just ridiculous. So, with all the headline risks we had going on, you have to keep in mind Thursday night you had Powell coming out, and he's talking about in March to do a way to stop the repurchase program. That's the overnight repurchasing program. It's basically a stimulus program. He's putting more liquidity in the market. They're planning on stopping it in March. So that was one negative. Then you had all the negative from the flu epidemic, that the exponential numbers are coming out of how many people infected on the whole flu thing. That happened overnight. And then you had the Brexit out of Britain on top of all that. So that's three negative headlines all hitting the market at the same time. I'm amazed the markets are holding up as well as they are. It's just absolutely phenomenal that we did not lose a heck of a lot more. Like, I was thinking S&Ps and stuff, 3-4% loss today, at least. And so, it could have been just a much, much worse session than what we actually saw. Okay, everybody, you saw my prior two videos, I was talking about VIX, and I had a level that I wanted the VIX to hit before I would call a potential reversal signal. Guess what? We hit it today. VIX spiked up, and it caught my untested my VPOC level So VIX came right up, right back to that level on the close. I didn't even know that till I just looked at it. So that gives you an idea that we finally hit that heightened level, which I would actually want to start thinking of a bottoming process for the sell-off. But like I said, the markets are extremely overbought, so that may not be the case. But yeah, this is the first signal that I would want to see that cross before I'd even consider initiating some swing long positions, and we actually did achieve that. Now, yes, we hit the VIX, but here's what I want to show you on the 10-year treasuries. Guess what? This is the reason I didn't take any long positions. I think we're going to gap right into this double top situation Monday. This is what I'm really expecting for the bonds, and that's going to put downward pressure on the financials and most of the markets. So that's why I did not take long positions. I wasn't daring enough to take short positions, but I definitely wasn't daring enough to take long positions. So I'm pretty much all cash into the next week's session. So just keep that in mind. Keep little over a week, China has been closed down, and come Sunday night, China's markets are going to open up again. And Taiwan was only shut down for 3 days, and they almost caused a what did they call it? 1 second here. Circuit breaker. They almost triggered the circuit breaker where the markets would have been shut down. Well, you've actually got 2 more days and further downside in the U.S. market or in the global markets for China to come in, who is basically the whole reason we're having to sell off in the first place. So I'm fully expecting, assuming no outside news, China's going to be kicking off circuit breakers right at the open Sunday night, and that could actually lead into more panic selling whenever you're hitting circuit breakers. So just keep that in mind on that side. Now on the other side, the government has had a whole week to think things over, what's going on here. And I have a gut feeling before the markets even open, and they typically do this on Saturday, they're going to announce a massive stimulus program into the markets. They're going to infuse a bunch of cash into the markets tomorrow, in my opinion. They just haven't done it because of the holiday, but I fully expect that's what's going to happen. We're going to have a massive stimulus program, and that's going to potentially lead to a gap up in global equities Monday morning. Okay, now if that happens, but there's no guarantee that's going to happen. But I just know how the Chinese act, and they got bigger things on they got a whole lot worse things to deal with than whether or not to put cash into the markets and adding liquidity to the markets. And if they were to add a bunch of liquidity to their markets, that would be a global-wide stimulus for Monday. And that's exactly what all these markets have been doing for years now. So that's what I'm looking for. And despite the fact, we can actually have that stimulus and still get that bond touch. So I do want to point that out. I mean, just because that doesn't necessarily mean the markets are going to be selling off with the bond spiking. You don't have to have a bond spike and the markets will all be red. They're not, so. But generally, if you have a spike in the bonds, you're going to have a sell-off in the markets. So at least that's the way it's been happening here lately. Okay, this is the 3rd week in a row that we have cracked the market maker move to the downside. So I do want to point that out. Now, my market maker moves, this is a study with that integrates in TOS and have automated levels. So they can be off just a little bit. My lines can be just off, but they're really close. Unless you manually draw them, you're not really going to have them from week to week exactly right. But my point is, we did break well below the market maker move for the week, came right down to the 50 SMA, and found some buying into the close. So that is an important test right there and it suggests that we are going to have a continuation to the upside Monday, first of the week. And so just keep that in mind. And in that same toad, I tried to buy Apple. Yes, I did. 1 second here. Okay, I tried to buy Apple right here when it touched, and I put 3 orders in within about a minute's time right through here. I couldn't get filled on any of them. So at this point in time, this afternoon as 3:30, I mean, they were just really starting to load up on Apple to the long side. Now, granted, I canceled my orders and it rolled back over for even lower prices. But that right there told me there was a real appetite for Apple at this price point as of today. Now, I can't say that's going to be that way Monday, but that's just something that I was noted because I had so much difficulty trying to fill. I was just trying to go for a quick trade on it, but I couldn't fill on my prices. So that's just something to keep in mind. There were buyers sitting there waiting to initiate positions at these price points, and it would not surprise me to see Apple gapping up above my yellow line, the 310.21 area come Monday morning. Another one that got rocked, that was eBay. I wouldn't actually want to hold it to the short side down here because this is a responsive buy zone for eBay, in my opinion. So this is like another one suggesting that we're going to get a pop Monday, and it got really hammered. CVX, they were just destroying the energy companies today. CVX, that was really destroyed today off the earnings call. See here on my chart. Give me 1 second here. This is one that I definitely wouldn't want to take it to the long side. It doesn't look like the floor is in yet, in my opinion. I mean, we have found some responsive buying here before, but it looks like it's wanting to come all the way back down to the 103 area, in my opinion, on the As I said, the semis, they're breaking down out of my zones here on the semiconductors. And you can look here on your weekly just how extended we are, just like with the NASDAQ, how above value we are on these semiconductors. If you go back on your monthly webs, I mean, it's a little bit different, a little bit more telling here. Let me remove this, make things a little bit clearer. It looks to me like we're going to be coming into this trend line this next week. So continued down pressure likely, in my opinion, on the semiconductors. We're gapping down away from this higher distribution. At least that's the way it looks like right now. So that's another. I saw that before the close, so I saw that there was more room. That's another reason I did not want to push the longs, thinking that we were going to continue to have responsive selling in the Qs come Monday morning. Your XLK, this is your technology. Went up, came back down, completely engulfing the week's candle from the beginning to the end, and we closed outside of this primary up channel on our technology, suggesting that we might have a continuation to the downside next week. So that's another one I wanted to keep on your watch. I had mentioned earlier in another video about how XLV just completely, this is your healthcare. In 1 day's time, we went from range highs all the way wiping out the all the gains for 2020. And looky here, we had a couple of days of digestion, and we're just gapping down away from this now. This is really showing relative weakness to the overall markets. They are just absolutely getting out of the healthcare stocks here for some reason. So just keep that in mind. We've broken. We seem to be breaking away. We found some. This does not look like a support zone, in my opinion, for healthcare. It looks like even more continuation in the healthcare space is likely. So just keep that in mind. That I do not like some of these charts, with the exception, SPY bouncing off the 50 there. So maybe these are dip buying opportunities. I'm not for so sure, but this thing here is just really looking ugly. And even our XLP, this is our consumer staples. we have an engulfing candle. It's engulfing about a week's worth, virtually a week and a half's worth of candles. Almost 2 weeks worth of candles all got engulfed today. So that's quite a bearish scenario whenever you see big engulfing candles wiping out weeks worth of value all in one day. So that is not necessarily a good sign going forward here. And this is your defensive sector. So that was just people just getting out of equities. Whenever this happens, there's actually liquidation in equities happening. Whenever you're at range highs and something that's supposed to be defensive, and they're actually liquidating that and having a major candle like that, that's leaving equities entirely. They're cashing out. So just remember that. Caterpillar and Honeywell reported today. Major components of the industrials, both of them sold off heavily today, and that is a major down candle here in our industrials. We broke the primary uptrend. We've broke the 2020 gains. So yeah. So basically, the only thing still holding in the holding us up for 2020, that is the Nasdaq and the semiconductors are still positive for 2020, and that's about it. So just keep that in mind that just about everything has broken for 2020. That P&Ls are now negative across the board for just about everything. And so that is a warning sign to fund managers and stuff like that to start liquidating their assets. And I have been mentioning that on several videos. So just keep that in mind. That is a major engulfing candle on the industrials to hit the markets today. Some of the top option players here, look at the volume on Luckin here. It just, it was getting decimated early on today. And boy, those options were going through the roof earlier today on the put side. And so I wanted to bring that one up. Then Apple was the next negative, but Luckin was just getting destroyed today. And then on the bullish side, we had IBM, even a bad tape, gapping up on strong volume because they were getting rid of their current CEO. And it's not something, in a bad tape that you really want to push too hard. And then you have Tesla up today. Tesla broke out to all-time new highs here. As I said in my last video, I think it's on its way to 750. Do I think Tesla's worth 650 a share? Hell no. Do I think it's the second most valuable car company in the world? No, I do not. Because I used to work for Toyota. And the cars that I made on the Sienna minivan line, between the two shifts, we still made more vehicles than what Tesla's currently making on just those two lines. And Apple's got Toyota's got plants all over the world. And that one little plant, on that one little side of the plant, we were making more cars than what Tesla's currently making. And so Tesla's justified to be $650 a share? Heck no. Hell no. But I said in the last video, investors are going to keep buying into this, and I really think it's going to go $750 a share before a lot of idiots get their heads chopped off on this stock. And that's I don't mean to offend anybody, but I am from the car industry. I know how things are made, and there's nothing that they're going to bring to auto manufacturing that can justify being the second most valuable company in the world, an automobile company in the world, in my opinion. So, sorry if that offends anybody, but that's just, unfortunately, that's the way I believe. And then you have your Amazon. Everybody looking at that chart, just completely way up here, completely an amazing chart. It would have been a really nice short if you could afford it. The option premium was just so expensive. I couldn't even take a short in this because the premium was so expensive on that in the Amazon for the fade of the pop this morning. So, but yeah, what an amazing quarter for Amazon. And I have never seen in my life a day where Amazon was up to over $200 and the Qs were down all day. This is just unprecedented territory in the markets. Can you imagine what would have happened if Amazon missed and just how bad our markets would have been today? Oh, my Lord. Okay, that's just some stuff I'm seeing. There's a bunch of other stuff here I could have went over, but the video is getting too long. It's longer than maybe one of the longest videos I've ever had. So please like the video if you like it, and leave comments below. And I do think after going through over all my charts and stuff like that, I'm still I still kind of think that we are going to get a gap up Monday. That's just my bias. I think we're going to get a stimulus out of China. So without knowing the news and trying to forecast ahead of time, I think that that stimulus is going to potentially at least flatline us a little bit for the open Monday. So I'm not necessarily saying we're going to keep going up, but as you saw with a lot of my charts, I think there's still more support, better support further down. It's just we're bouncing off of some critical moving averages, and it just take a coin flip for this market just to be all bullish again, in my opinion, because I don't think the bulls are by no means shut down yet. Okay, thanks a lot. See you later.